Hey everyone, welcome in to another daily editorial here on the KE Report. Corey and Chad here chatting with Kenton Ralph Toews, founder of Youxia Crypto, as we bring Kenton on about every month to update us on what's going on in the crypto world. Last time we had Kenton on, we were talking about the ETF approvals and how the Bitcoin price had moved down. It corrected after those approvals. That correction didn't last all that long because throughout February, we have seen the Bitcoin price again move substantially higher up to about that $52,000 range. Now, Kenton, just circling back to maybe where this demand is coming from and some of the ETF data, can you update us on what we are seeing in terms of interest in the ETFs, especially when it comes to money inflows, please?
Sure, you bet. Thanks for having me, Corey. So the ETFs appear to be, quite a success. They continue to pull in about net inflows of 500 million a day, which represents about 10 times new issuance of Bitcoin. So every day there's 900 Bitcoin that are created, they're mined. That's what the miners are doing. You hear about Bitcoin mining. They're all chasing after these new Bitcoins that are created every 10 minutes. And that's the block reward. So every 10 minutes, there's 6.25 Bitcoin created, which works out to 900 Bitcoin a day. And with Bitcoin at $51,000, that's about $45 million worth of Bitcoin created every day. When you look at the ETFs, those net inflows of 500 million, that represents about 10 times the new supply, that inflation of Bitcoin. And so crude comparison, suggests that that is these new ETFs is driving up the price, is gobbling up the supply. And then what's cool is in April we're going to see the halving, which happens every 4 years of Bitcoin, where the new supply gets cut in half. And this is all part of the code. It's all pre-programmed, predetermined. And so roughly on April 19th, those block rewards, those new Bitcoins being created, is going to get cut in half. So you're going to be created about 450 per day. It kind of begs the question, going back to the ETFs, let's just pretend, that they're still having net inflows of 500 million a day. That continues past April, May, June. That's essentially 20 times buying pressure on that new supply. So it could have a real impact on the price. Now, of course, there's other, the ETFs aren't the only people buying or selling. There's other market participants. But if you look at the long-term holders on Bitcoin, we're kind of we're still at all-time highs. We're at about 70% of the Bitcoin supply has been held for 6 months or longer. This cohort of holders, if you will, they don't sell on every little price rise, right? They're buying and holding for a reason. And, it's not to watch Bitcoin go to 60 grand or 70. These people are looking for 100, 200, 300, a million, and they're patient. Over the years, because Bitcoin's been so volatile, one of the mantras, things that have developed over time is people just dollar cost averaging, where every month, every paycheck, they put in a few $100, 1,000, whatever, and they just slowly keep buying. No different than anybody's savings for retirement, an RSP or 401k. After every paycheck, it just goes into their retirement account and just go buy their mutual fund, and they just keep adding to it. People are doing that with Bitcoin. And so, they're not worried or looking at the price, right? They're confident that over time the price will go up. So they just keep buying. So come the halving, it's reasonable to suggest that this demand, the current demand, will continue. And but so if the demand is strong and the demand stays constant, but the supply gets dropped, that's got to drive the price up, right? And so you would think if this is all pre-programmed and predetermined, the markets would price all of that in, and it shouldn't have an effect on the price. But if these people are just constantly buying, just constantly putting new dollars in, and we have that constant buy pressure continue, it should drive up the price. So it'll be really interesting to see what happens if it holds true that everyone's watching this end of April to see if it's going to have impact on the Bitcoin price. Because the other reason people are so hung up on it is because it has. In the previous If you look at 4 years ago, 2020, 2021, that was a major bull market in crypto. You go 4 years before 2021, 2017, 2016, right? That was another big bull market. 4 years before that was 2013. Every 4 years, that's when we've had major bull markets in crypto and Bitcoin, and they've all coincided with these happenings. So a lot of people are placing a lot of stock on this, that's going to drive the next crypto bull market. But it is interesting to note that there's been something else going on the same 4 year cycle that's on the same timeline as Bitcoin happening. And that's QE and all the debt from 2008 being rolled over every 4 years. And every 4 years, the Fed eases liquidity to make it easier for the government to roll over that debt. Lower interest rates make it cheaper to roll over. Maybe this has nothing to do with the halving cycle, and this has everything to do with the liquidity cycle. And what drives crypto and Bitcoin and all risk assets just happens to be easy money sloshing around. I can see both. I can see being one or the other. I can see being a combination of the two. There's no real way to know because there's no way to separate them. But in theory, if those previous cycles hold true, this should be a fantastic year for crypto because we're coming into a Fed easing cycle and the halving on Bitcoin reducing the supply.
Yeah, Kenton, that's a nice lay of the land there as far as the multiple factors that could be driving up the cryptos, especially Bitcoin in 2024. As far as the halving, I was going to ask you about how in past cycles, since it happens every 4 years, the trading action, or maybe you could put some color on this as far as people anticipating and front running that process was going to happen. And then is it a buy the rumor, sell the news effect, or do you see continued buying afterwards? And what effect do you think the ETFs being involved now may be different this time compared to past happenings?
I think you'll see continued buying. There's definitely traders who'll be out there using leverage to trade it. Just like with ETF approval, because we had a few false starts with the ETF, I think that fleshed out the leverage. And that's why when it actually happened, everyone was kind of spent. They were kind of already worn out. So there wasn't much gas in the tank to drive up the price. I definitely expect traders to use some leverage and to trade around it. But those are more, they're more short term, right? To get, they're not, I think that people, in my opinion, what's going to drive the price to say 100 grand is people buying and holding. It's not going to be traders getting in and out. And I think that demand is going to stick. I think it's going to continue. People in crypto like to call those not in crypto normies or no coiners, people that are on the sidelines, the outsiders. I've had normies and no coiners bring up the ETF like, hey, well, this is real. Crypto is real. So I think the ETF goes a long way to bringing in new demand. And all that does is make the existing Bitcoin holders that much more bullish. And if anything, they'll buy more. So I just don't see how demand is going to go away. All else being equal, I think demand is going to continue to go up.
Now, does this impact the miners, the Bitcoin miners? Because every time this halving happens, well, they earn less Bitcoin for their mining activities. They need price to go up to incentivize them to continue to mine. Have you noticed any changes in the actual miners' activity when these halvings go through?
That's a great point, Corey. And then, unfortunately, Bitcoin mining is no different than any other mining operation in the world. Is the one thing they can't control is the price, right? They're price takers, not price setters. So could you imagine a gold mine all of a sudden seeing their production get cut in half? The share price would suffer, right? Unless the gold price doubled and then some to make up for the difference. And that's what we need to see happen with Bitcoin. If we need to see Bitcoin double in order for these miners' valuations to hold up, and in order for them to stay solvent too. Otherwise, they're going to get squeezed, right? It really just is going to, again, like all regular mining, it really comes down to cost of capital. Whoever has the lowest cost of capital is who's going to win and survive, because the people with the higher cost of capital won't be able to. So it's those lower margin producers that will get squeezed out, and the higher margin ones will remain. it'll be interesting. It's been a long-term kind of criticism of Bitcoin is how will these miners stay in business? How will they survive? Because, you know, Bitcoin is going to go up 100% every year to infinity, right? It's going to start leveling off, right? And how are these miners going to survive if they keep seeing their revenues, the revenue or their production get cut in half every 4 years? And the answer has always been transaction fees, and that we need the transaction fees to go up to offset the loss from the mining rewards. Those transaction fees have gone up. They've exploded actually the last few months with what's called ordinals, and it's like NFTs on Bitcoin, and that's created a huge argument, debate within the Bitcoin community. The purists, the Bitcoin maxis, the ones that think Bitcoin should just be money and nothing else, they hate ordinals. They don't like it. They don't want it. That's not what Bitcoin was designed for. It's just gumming up the blockchain. It's chewing up bandwidth and increasing the cost to transact on it. Whereas the people on the other side of the debate, it's like, well, Bitcoin it's whatever you want to do with it. It's open source, right? If the code can do it, the code can do it. And who cares what the fees are and who is paying for it for what? It's a free market. I'm on that side because this actually solves the miners' revenue problem. Having these high transaction fees is ultimately what we need. I don't think Bitcoin layer one is going to be the true payment network. I think we're going to need a layer two, like Lightning, to get those ultra fast, ultra cheap transactions. So I'm not worried about the transaction costs going through the roof right now. I think it's great. I think it goes a long way to making these miners sustainable and giving them some staying power. So perhaps these ordinals couldn't have come at a better time, right when miners are starting to feel the pinch on block rewards going down. It's going to be offset here with the transaction fees. But I don't know how, those transaction fees are fickle, right? Those are not pre-programmed. That's totally about market demand. Heaven forbid they put out some kind of update or change to the code to try and prevent these ordinals, and that is being talked about. I'd be surprised if like that goes through. We'll see. But this is still, it just goes to show we're still in the early stages of Bitcoin. It's a lot still has to be figured out, and that means we have still a long way to go. So yeah, it'll be interesting to see with these transaction fees. I hope they stay up, keep the miners in business, keeps the security of the network up, and everyone's happy.
What about this halving, the impact on other coins over the past few halvings that we've seen? What's happened to some of the other coins?
They outperform. They take off. It's no different than gold and gold miners, right? And usually, and Bitcoin leads, right? Bitcoin will outperform everything else for the first few, maybe several months, and then people roll over their profits from Bitcoin into the other coins. And we're seeing that right now. Bitcoin's leading the charge. We've had a few altcoins perform and do well, but overall the altcoin market is still, as a whole, is still kind of doing so. The whole sector hasn't truly participated. I expect that to change this year, especially as Bitcoin makes new all-time highs. And a word of caution too. I deal with this all the time with clients and investors. They'll have a position they've been holding on to for like several years, expecting it to turn around. Lots of positions, not just in crypto, but even in regular stocks. They might have done well in one bull market, but doesn't mean they're going to do well in the next bull market. And so, yeah, hopefully whatever people or whatever crypto they're in the right ones that are moving forward, are advancing, and do have the fundamentals to participate in this next run, because a lot of them won't. So hopefully, yeah, people are wise to that.
Well, it's been interesting to watch the volatility around the ETFs, and then on the back of that, this recent pop higher in the Bitcoin price really begs the question as to where Bitcoin could go from here, because the last about week or so it's leveled off a little over 50,000. Does that mean it's building a base? Might it correct? Who knows? But this halving is also another kind of interesting nuance of this market, which, as you said, happens every 4 years. Let's see what happens this year with the ETFs also now being in play. Ken, thank you very much for your time. Always interesting chatting and getting some updates on the crypto sector. We'll chat again next month. I hope you have a great rest of your week.
Great. Thanks, Corey. Take care.